So at the heart of this case is a couple from Washington. They're seeking a $15,000 tax refund from the IRS on income that the IRS said that it earned, and therefore it taxed them, and they paid it. They want a refund back. This couple is claiming the shares of this company that earned the income is an offshore company. It's not in the United States. They never had the money distributed to them, so they were never paid income on which they paid $15,000 in taxes. They're not in control of this company, and we often see this. It's called phantom income. Mm-hmm. Phantom income is when you are taxed as if you had received the income in your bank account, but you haven't received it. At heart of this whole question is what constitutes income, which can then be taxed. So it's a really interesting Supreme Court case because depending on how the Supreme Court rules, it could set a precedent. Right. Other courts in the future could look back to this case to say, hey, well, the Supreme Court said you can tax income even though you don't actually receive the income. Or they can look back and say, hey, in 2023, the Supreme Court ruled against being able to tax income on something that you never received, don't have any control of, and you never had the money in your bank. And I think it's going to have far-reaching and future implications for how taxing and tax policy is created and implemented, for sure.